Hello everyone, Larry Lavrentich for Ichimoku.co and ForexTrading.tv with a daily analysis for the Aussie dollar US dollar FX for the trading day ending Thursday, March 6th. Well, a very strong bullish candle today, a very large white body and a very nice extension of the previous white body with this solid trend to the upside. The large extension of the body suggests that the buyers have made a very substantial amount of net bullish progress in the day between the open and the close. It suggests that net momentum has swung very strongly to the buyers. The buyers have closed with control and they've been fairly strongly committed to taking this market higher, except for the latter part of the day when the market tested above the 91-cent level. Now, the only problem with this type of candle is that very often we fail to see follow through at these extreme days, or following these extreme days. We tend to see markets retrace to a degree, or for the buyers to take a bit of a break. It doesn't mean that the sellers come strongly into the market. And as we're watching this current candle develop, this small doji type candle, we're seeing indecision in the market and the market failing to take out that previous high. Now, remembering that zone of resistance that I've spoken about quite often and that has held as previous resistance in the months of February and January, we've seen the market trade above the peaks that reach the maximum level within that zone, but the price action has still been rejected to a degree from higher levels of that zone, so suggesting that the top of the resistance area here is going to be very important, and that's at roughly about 91.25. Now, in terms of the Fibonacci extension and some interesting interaction with the 261.8% level here. For the current day's trading as it has finished, it's the market has almost touched that level and been rejected in a minor way. No sign, however, with that candle that there was any weakness. The buyers were still very strong, so no suggestion of a potential change of trend. But with the current market failing to test above there, it does suggest that that will be an important level for this current session that is now trading. So we want to watch how the market interacts, and at the moment price action is being rejected away from that area. Now, a very important event has occurred today in relation to that large inverse head and shoulders pattern that I've been speaking about for this week and the past week. Here we have the prior downtrend in place. Very important with any patterns, we have to have a trend in place prior to the pattern, leading into the pattern. If we don't have a trend in place, we don't have a pattern. We may have a congestion area that we can draw boundaries around, but all the rules for applying to those patterns don't work. They're not valid. So the trend in place, the congestion area with the left shoulder, the head and the right shoulder. It's a fairly volatile pattern here as well, very deep pattern. Today the market is actually closed in a strongly bullish manner above the neckline. That gives us completion of the pattern. Once that pattern's been completed, we're able to project the target, and the target is the depth of the area from the head to the neckline projected up. So that's for an inverse head and shoulders pattern, from the neckline to the bottom there of that head, projected up from the breakout, and that gives us a target around 95 cents. Now, how realistic that target is, I'm not too sure. We won't really reach that target in one go. We may eventually, but we really have had completion of this pattern. Now, one of the scenarios is that the market goes on with the move, and what I'd actually like to see here is some decent bullish follow through to give us a bit more confidence in this pattern, and also in the important breakout that we're seeing above the Ichimoku cloud. So we'll come to that in a minute, but I want to see follow through, and I'm not actually seeing that at the moment. I'm seeing indecision in the market, so I'll be watching that high very closely and looking for the buyers to come in strongly into this market. Now, as I mentioned before, with extreme days we don't tend to see that, but we could see it, so let's watch that high very carefully. Now, in terms of Ichimoku, the bullish breakout above the Ichimoku cloud here is very significant, and it is a buy signal with Ichimoku, and here we have a bullish breakout, which is how I like to see these breakouts, not a breakout on a weak candle. We've had a breakout on a very strong candle, and it does give us a bit more confidence in these breakouts. But if we recall, in the recent past, over the past month or two, we've seen markets breaking out from the Ichimoku cloud, and we're not seeing follow through. So what I want to see is another candle making a higher high and a higher low, and a bullish candle. So that would give us greater confidence in this being a valid signal with this breakout to the upside. So technically here we have a change of trend in that long-term time frame to the upside, and that is in line with the market breaking out above the inverse head and shoulders pattern and closing above the neckline of that pattern. In terms of the other indicators, we are trading above the Kijun-sen, so we're bullish in the medium-term time frame, bullish in the short-term time frame now to a very significant degree by trading a fair way above the Tenkan-sen, the green line, and the Chikou span is above the corresponding price action, so confirming the bullishness that we're seeing in all three time frames. Now the problem here for the buyers and anyone that might consider going long here is that we are still trading within this zone of resistance, so let's bear that in mind. So not only are we looking for follow through, but we're looking for a bullish close above this zone, and if we can manage to close above there and even above the 9160, we would have greater confidence in any upside move and suggest that there could be perhaps potential for the market to end up trading up to that 95 level. But really I think we just need to bide our time at the moment and wait and see how the market reacts to this very strong overhead resistance.